again, the customer doesn't have to do it. We don't tell you how to run your business.
For sure.
You tell us what you need from us.
Right.
So there's just more than just writing a piece of a policy with paper on it and send it to you. We're very hands-on and we're very involved, and they love it. They absolutely love it because
sure.
they want to be involved. They want to know what's going on. We walk them through the renewal process. They love the claims meetings every quarter. They love that we're reviewing their contracts. And when we changed 2 or 3 wordings in 2 of our big contractors and 1 of our little ones, and it's been very beneficial to them. So all that is just key to keep their business going, as well as to minimize the losses for them. And
hello, and welcome to Elevator Tools and Tech, a special series from the Elevator Careers podcast, where we spotlight the latest innovations, tools, suppliers, and technology driving the vertical transportation industry. In each episode, we sit down with the creators, engineers, and solution providers who are helping elevator companies work smarter, safer, and more efficiently. This episode of Elevator Tools and Tech is brought to you by Insuramax, a trusted provider of insurance solutions for elevator contractors. Today I'm talking with Alan Jones, Vice President of Commercial Lines for Insuramax. With over 20 years of industry experience, Alan understands the unique risks of the elevator industry and has helped create a comprehensive insurance plan to protect your business. You can learn more at insuramax.com or give Alan a call at 502-648-7496. Now, let's dive in. Alan, welcome to the show.
hey, thanks, Matt. Thanks for the opportunity.
Yes, sir. I'm excited to be able to talk again. You and I have had some interesting conversations, and I'm always intrigued because as I talk to a lot of elevator contractors, they tell me that insurance, obviously it's important, right? This is a high risk industry, but it's also one of the top line items on their P&L, and so they got to keep an eye on it. And I know you've got a lot of experience in that field, so just digging into that a little bit more is going to be a lot of fun. Been looking forward to it. So I just want to start off. How long have you been writing insurance for elevator contractors?
So I started about 25 years ago, wrote a nice size elevator contractor here in Louisville, Kentucky. I love working with contractors. I love elevator contractors. It's a tough business. It's a niche business.
Sure.
Every city needs them. And you're right. Insurance is going through the roof on them. And we've been successful in starting a program that's been pretty good and not only gives them the best coverage, but saves them plenty of money as well.
That's awesome. How did you kind of get started? You said you wrote your first one 25 years ago. What led to that, and what led to you moving into this space and not leaving that one as a one-off?
So, I've been in the business since 1988. Started in the insurance business. We started our own agency in 91.
Mm-hmm.
East Lucans at the time. We were purchased in 2011. And when I wrote this first one, the elevator business, I noticed that there wasn't a lot of markets out there. The price was going through the roof, not because of what they did, but the overall loss experience of the industry. Because when you get in New York and Florida and California, maybe even Louisiana and Illinois, there's a lot of losses, a lot of claims.
Gotcha.
I fell out of the elevator. It wasn't level. I tripped and fell. I love the myth about the elevator fell to the bottom, which that's not going to happen. But anyway, so after writing this first one, I'm like, you know what? I need to explore this some more. And I started calling on other ones, and we were very successful. And it was a great program out there. There's 2 programs at the time. We used the one a lot.
Mm-hmm.
And then as we kept going, we kept adding them. But I noticed that the increases on the renewals kept going up and up,
Right.
not because of the insurance company, but just because of losses, and it's kind of like a pooling effect.
Sure.
So it was a program. And in 2020, we wrote a large one, and it was time to get creative. So we went out to the market, found a carrier that was very interested, and we put a big program together for them, and then we started adding more to it. Our decreases, we have multi-year policies. Some are 3 years, some
Sure.
are 2 years, some are 1 year based on the size. Ones that have came up for renewal, they've all seen a decrease, which is unheard of in
that's
this
huge.
industry.
That's huge.
But our loss ratio overall for the program is about 16%. So,
that's great. For some of our listeners, what are some of the, and part of the reason this question's coming up is I talked to a guy week or two ago, and he was telling me uh, somebody he knew of had purchased their insurance from a local, you know, commercial insurance agent, but apparently they didn't understand, or maybe they didn't tell him that the condos were excluded, which in his case was half of his business. He's doing apartments and condos. It just so happens that the condos were considered residential, and the apartments were considered commercial, and so he was totally excluded. And I'm just curious, from your vantage point, what are some of the risks? Maybe it's exclusions, but what are some of the risks that contractors may not be aware of?
Well, that's a big one because there's not a lot of carriers that want to ride them anyway,
Hmm.
elevators. But you got to be careful because the two big ones, like you said, residential is excluded, which could apply to condos. We just wrote one in Florida where we rewrote it. Same situation. So you have zero coverage. So if
Yeah,
you're working on those condos and it's excluded. So you're paying for nothing.
right.
The other one in New York, you got the labor law. Most people don't want to add that to their policy. We do.
Mm.
We also like residential. It's not an issue. So those are the two big ones you better be aware of.
Yeah, if they don't add that labor law, then there's more risk that they're not covering, right?
If the employee gets hurt and the employee in New York would sue the building owner is going to be listed as additional insured under your general liability policy. So then it's going to come back to your general liability, the contractor's general
Sure.
liability policy. Well, if that's excluded, you got no coverage. So now you're on the hook.
All right. So they think they're covered, but because they didn't add in that employee policy, it's really kind of I wouldn't
The
call it a
labor law.
backdoor, right? But if you don't know it, then you're at risk for sure.
Honestly, Matt, I mean, that's the job of the broker.
You would
His
think so,
proposal is to
right?
show
But
everything and everything.
you'd hope.
Mhm.
Yeah. Well, and I
Would,
guess
but you know,
and it sounds like not everybody's brokers either know, or maybe they're just not being upfront about what the risks are. I
and they
mean,
might not know. I mean, the people that are writing this business, you got to know what endorsements you need and the coverages you need because each state's different. And elevator contractors, again, that's a tough insurance product to get insured. So,
yeah, for sure, for sure. What are some examples? Maybe a story when a customer contractor was unaware of some risks, and you know you've seen them maybe under insured.
we really haven't. We've came across policies that didn't have the coverage they needed. Underinsured, that's a tough question. You're going to carry the limits your customers want you to do. Most of the
Hmm.
time, our customers carry a $5 or $10 million excess, and then the each occurrence limit on the GL is either 1 or 2 million.
Yeah.
Well, how much insurance do they need? It's based on what their customers' needs are. And, I've seen all kinds of lawsuits over my 30-something years. I've never seen one where they try to go after the company for more than what they had.
Okay.
But 99% of our customers have general liability and excess, and our
Okay.
program does both. So we do
Okay.
general liability, we do excess. We also can do the work comp, the auto, the bonds, the property, and the marine. We're a one-stop shop. We do it all, plus the
Very nice.
certificates. We review your contracts, but the most important part about our program is the claims handling, and that
Okay.
is key. And that's why our program's been so successful.
You mentioned, that you were selling a big policy. It was time to get creative, and that's when you came up with a new program. And I know that in previous conversations that's tied to claims handling. Let's talk a little bit more about what was it that you realized that, hey, we need to think differently about this. Let's create a new program this time. What was kind of driving that?
So the driving point is you have to be proactive on these claims with these
Mm.
elevator contractors. Some are legit, some are bogus, but you got to get out there as soon as it happens. And the
Okay.
biggest thing is you have to make your customer aware, whether it's a small one or a large one, let us know ASAP. So we have a TPA that does nothing but handle claims for this program. They're
Okay.
the best of the best. They also handle the crane. There's a crane program in New York. They handle
Okay.
those claims as well, which that program is doing great. But our guys, as soon as there's a loss, they're out there at the scene that day. They're getting witnesses, statements, they're getting affidavits. They're getting all the information they need to get a good handle on that claim. So instead of just turning the claim and the broker turns it to the insurance company, and sometimes, most of the time, the insurance company sits on it and it puts a little reserve. So a reserve is, hey, we think this might only be $10,000 based on what we know, but they really don't know too much because they're not out there.
They haven't done their homework
So,
yet, sounds like.
so right, exactly. So they do a $10,000 reserve. We've seen this a lot with our customers that we picked up. Well, 2 years from now, that 10,000 reserve is now 500,000 or 1 million, which is driving their renewal through the roof.
So I think what you're
Well,
telling me though is there's a claim out there that's 2 years old. In other words, somebody got hurt 2 years ago and we haven't resolved it. We haven't settled. We're still sitting on it, kind of reactively wondering if somebody's gonna years later say, "Oh, well, now my dog died, and now you owe me," or whatever, right? They're gonna continue to kind of build
right.
that. Okay, interesting. So how
Well,
does your
they'll get the letter from the lawyer 6 months later, but the the key to ours is, again, if you're not out there right when it happens,
Mhm,
well, it's hard to find witnesses. It's hard to find what exactly happened. They're going to probably come after everybody that touched that elevator. So
sure,
not just us, but anybody else that worked or did anything on that elevator. But with our program, our guys are really, really good across the country. So they have a great idea. If it's something that needs to be settled, we settle right then.
okay,
And that's why our program's like at a 16% loss ratio since 2020. And I think you're going to see most of the other programs out there or insurance companies writing it, their loss ratio is either 90, 100,
ouch,
110%, which
wow,
it all comes back to you on your renewal pricing.
for sure, for sure. If they I mean, if they're yeah, if they're saying their loss ratio is that high, well, then it's going to cost you a lot more to renew. So I'm hearing.
Absolutely.
Okay, so let's talk through that a little bit more. Just the claims. What's at risk if somebody falls? Maybe they get pinched. Maybe they get somebody gets it's a legitimate injury, right? But if I don't talk to them or do anything about it for a year or two, what could happen?
So a claim that could easily be 10,000 or 5,000. If you ignore them or ignore the claim, the first thing you want to do is prevent any type of attorney getting involved.
Okay,
So if you can be proactive and get with that customer, that person that's injured, and just show them some TLC, show them that you care, whether it's your fault or not. We've seen a lot of times that it really minimizes the losses. They feel good that you're taking care of them. They trust us and they're willing to settle, and usually for small amounts. If you ignore them, what happens is, now you got other people in their head. They're getting letters from the attorneys. They're telling them, hey, we can get you a 6-figure summary. And now their eyes are opened up and going, let's call them. They call them. And at the end of the day, something that could have been settled pretty simple ends up being 6 figures and maybe 7 figures. Now, 7 figures would probably be a death or a severe, severe injury. Not saying that couldn't happen if we had one of them under our program, but our guys are really, really good. But ignoring a claim is the worst thing you can do. And I have a huge trucking company that is so great on being proactive on claims. They're amazing.
yeah,
And I can tell you that their losses have been fantastic. In the auto industry, it's really tough right now, but theirs been good. So we're very proactive. We make the person's injured. We want to know that we care. How can we help you? And that goes a long way instead of ignoring it. And ignoring
for
it
sure,
is just going to make it bigger, bigger, bigger. Because
for
at the
sure,
end of the
for
day,
sure.
the attorney that's representing them, he's looking at it for, hey, I'm going to get 30, 40% of this. So, let's go do it.
I mean, it's fascinating to look at it from that perspective. I mean, I've heard of lawsuits that yeah, probably didn't need to happen, right? It's like you ignore somebody long enough and you make them mad enough. Well, then now ends up being a multi-million-dollar lawsuit over something that if you'd have just paid attention to the person and dealt with it, and to your point, I think getting out there, finding out what were the facts, right? Who were the witnesses? What really happened? Because if somebody's really hurt, we really want them to be made whole, right? We don't want to rip anybody off, but at the same time, we don't want to
Absolutely.
ignore them, make them mad, and then risk blowing something up that didn't need to be blown up. And it sounds like you recognize that and really work to make sure that you're on top of it. So again what happened, who saw it. Let's take responsibility rather than allow something beyond beyond that to happen.
Absolutely. And at the end of the day, I work for my customer. I don't work
Right.
for the insurance company. I don't work for anybody but that elevator contractor.
Right.
And whatever they need or what they need from me is I'm here for them
Yeah. Yeah.
24/7.
Yeah. So you mentioned that the renewals actually decrease. Tell me a little bit more about that process. What is that like? How does that work?
It's based on a lot of things,
Uh-huh.
so this program is based on revenue, makes it very simple to audit.
Okay.
A lot of them are based on payroll and there's 2 or 3 payroll classes. Ours is strictly revenue. The other thing is we give you a growth factor. So let's say that you say your revenue is 10 million, we do a 2-year policy. So that would be 20 million. And then we might give you an extra 5 or 10 million on top of that.
Okay.
So when you grow, and these guys are growing, and we want you to grow, that
Sure.
you're not hit with a big bill at the end of the year, at the end of the 2 years, because we put a growth factor in this. So on the rate, though, it's all based on, hey, how did you perform? And we do it on an individual basis. Not
Right.
that the other ones don't, but if you're at 10%, our program was at 90%, why should you get penalized?
Yeah. Makes sense.
Again, ours is at around 16%. So because the program's doing so good, we pass that savings back on our customers in a rate decrease. And it's working like a charm right now. It's been very successful.
Well, I think it's, from my understanding, it's sending the right message, which is, hey, if you do a good job managing your claims, well, then we're gonna, you're gonna benefit. And I had experience 20 years ago when I, got out of grad school as an HR guy at the time, working at a bottling plant, and the safety guy whose office was right next to mine. Well, he he basically brought $1 million to the bottom line because of the way he was managing.
Wow.
He had been there a couple of years, right? But all of a sudden, the region that he was managing, they were like, "Oh my gosh!" Right? We just blew plan out of the water because of Dwayne, the safety guy, and he was getting all these accolades, and that was kind of my first exposure to what did you do, Dwayne? But he was handling, if there was a work comp injury, right? He was very proactive with helping
Sure.
that person get back to work instead of just allowing to go on and on and on and the work comp insurance. So is it similar, I guess, in that regard, that if you actively manage your stuff, you're going to see lower risk?
Absolutely. I mean, so we do quarterly claims meetings. We also get the client involved, and they love getting involved.
Sure.
We want to know, tell us about your safety program. Our program too, we also have, which is part of the program, contracts that you have that we might be able to minimize your losses. So we will review a group of attorneys and will review your contracts. You don't have to change it. They'll just give you advice and say, hey, if you change this word a little bit or that word a little bit, then if a claim does come about, this will protect you more. All that's free of charge. Nobody else offers that. Again, we want to know about their safety program. If we come up with some ideas and say, hey, have y'all ever tried this? Again, the customer doesn't have to do it. We don't tell you how to run your business.
For sure.
You tell us what you need from us.
Right.
So there's just more than just writing a piece of a policy with paper on it and send it to you. We're very hands-on and we're very involved, and they love it. They absolutely love it
For
because
sure.
they want to be involved. They want to know what's going on. We walk them through the renewal process. They love the claims meetings every quarter. They love that we're reviewing their contracts. And when we change 2 or 3 wordings and 2 of our big contractors and one of our little ones, and it's been very beneficial to them. So all that is just key to keep their business going, as well as to minimize the losses for them and to keep giving them the savings they get every year or every 2 years based on
Sure.
how many
Sure.
years of
I
policy
mean,
written.
I'm sure they love having the expertise, the advice, because it's got to be one area where a lot could go wrong. You're spending a lot of money on it. You want to make sure it's going to work right, and just having a team of experts that can weigh in and say, hey, you might want to consider this or or like you said, looking at your safety program, right? Maybe you need to do something a little bit different just to make sure you're doing the right
Absolutely.
thing. So I wanted to see if you mentioned some of the high risk states, and it sounds like claims are kind of what drives those I guess the premiums and the risk? And do you still see declining renewal rates in those states?
Absolutely. So we have them in New York, we have them in Florida, we have them in California. Insurance rates there are high, but yes, we're getting 5-10% rate decreases there. Again, we can give them as excess as they want, 20, 25 million or more.
Right.
So yeah, we are doing rate decreases there, and it's been great. And the other thing that I think helps too, we bring the underwriter to the client. So they're going to meet their underwriter at
Okay.
least one time during that year. And when the underwriters are talking with the customers and you get a personal relationship going, then they know even if they have that bad claim, they'll look at it like, hey, they got all the programs in place. This was a fluke. It was a
Sure.
one-time thing.
Right.
And it's all about relationships in this business. Again, like I said, I've had contractors call me 3 in the morning, I answer, get them what they want. Saturdays, I get them what they want.
Sure.
And, because at the end of the day, they're buying a product. They want to be protected, but they also want to be able to get the service from that product they're buying. And we got a great group of service team here. They'll contact me. I stay very involved in my clients from as soon as I write them to the renewal or during the year, go out there and visit them, take them to dinner. I'm very hands-on. So, as well as I'm hands-on with this program. So it's been very successful. And, you know what? We're looking to add as many that out there that wants to save money and have the best coverage out there. We're here for you.
That's cool. That's cool. So one of the things I hear from people is, maybe they're a 20-year, 30-year mechanic wants to start his own. I've heard this more than once, right? That man, insurance is expensive. You got to have X $1,000 ready just to start with the insurance piece. What advice would you give to a new contractor? Maybe just starting out and wanting to start from scratch when looking for insurance, and how do they even begin to think about that?
First of all, I tell them to call me.
Sure.
We write a lot of new startups and those
Okay.
new startups are $5-10 million companies, but we have companies for them. We have two that they love it. So when they do start up like that, first thing we say, hey, we need a resume.
For sure.
We know you never owned an elevator contractor company, but show us your resume. And they're
Sure.
going to have all the experience they need. That's all the insurance companies want to know is, hey, these guys have done it. They've been there, so they know what they're doing. And we can put them together a program. It's reasonable. It's not outrageous. We can finance it, do finance agreements to them. We can take care
Interesting.
of. We just did one in Florida a month ago,
Hmm.
and they were shocked because they were getting prices and it was just a startup, 40, 50,000, and we got it all done for 14 grand. So
Wow.
we love startups. And I know this, it shouldn't sound crazy, but we don't care if you're a $12,000 premium or $2 million premium. We're going to treat you the same because one day you're going to be that $2 million premium.
Sure.
So, you're going to get the same thing as everybody else do. We treat everybody the same.
Very
And
cool.
we love startups. We do.
Yeah,
And it's amazing you mentioned that. There's a lot of startup elevator companies that just go through the roof after 2 to 3 years.
for
If you
sure.
think about all the buildings out there all across the United States, I mean, there's elevators everywhere.
Yeah,
I mean, even here in Louisville, Kentucky, we don't have high rises, but we have a ton of elevators. And it's neat seeing my clients that service some of the elevators here when I go in a building, I see their sticker on it. It's pretty cool. But
yeah,
yeah.
yeah. And that's one thing I love about this industry is mentioned startups is there's a lot of entrepreneurial people, but a lot of entrepreneurial opportunities, right? A lot of entrepreneurship that hey, once you kind of learn the basics, you can really want to say write your own ticket. You can, just there's so many innovative ways. Yeah, you could be a contractor, but you can also, invent a new product or some new software or there's a lot of ways to work in the industry. And so I love that. I just love that aspect of it. And I want to ask you though, you mentioned, just the industry, right, has changed over the years. What are some of the trends you're seeing kind of now and maybe even into the future with insurance and coverage and that kind of risk?
Well, I'd say the excess market is shrinking a little bit. You have a lot of less players that want to write elevator contractors,
Hmm.
especially in New York and California and Louisiana and Florida. The other states, not so much, but you're still limited. But your excess market, as well as your auto market, Auto right now as a whole for most insurance companies are, 105, 110% or more loss ratio because of these nuclear verdicts, which are these big lawsuits.
Sure.
So the excess size is shrinking. The good thing for us, we can still get you as much limits as you need. Um, I think that I think if the industry's going to have to do a better job of getting their hands around how they handle the claims because we have to limit these big verdicts. I think insurance companies have to pay more attention to them, be more proactive, and be out there. And again, you have to have the manpower, you have to have the people. No offense to insurance companies. I mean, insurance companies are great, but I think the more proactive you are, the better you're going to see your loss ratios and your bottom line going forward. Now, the elevator industry, they're coming out with all these great new electronics, computers, gadgets, and stuff that really helps the insurance companies. You got the
Right.
videos on them, but you got this is how it's running. Hey, sends a ding to the elevator contractor. I think there's something wrong with the elevator. It can shut it down, which prevents losses. We
Okay.
need you out there. So technology is getting a lot better for that industry, which is going to help the insurance industry as well.
For sure.
And hopefully their pricing.
Yeah, I
Um,
mean, and what I'm hearing you say is, hey, we got to be proactive, not only on the claims. That sounds like a kind of a make or break, right? If you're not paying attention, you're going to get played. It's really going to cost you because you don't know what you got, and then you're going to let it kind of mushroom and grow into something you didn't want, versus really getting out there, getting aggressive, like you say, and it's going to take some investment up front, like I say, with the people and the training and the time, but it's going to pay off in huge dividends, is what it sounds like. And not just for the insurance, but for the contractor and even for the riding public, right? If they feel like they're being taken care of, well then, hey, they're being taken care of, right? If then there's nothing more to do. It doesn't need to wait for 2 years for somebody to get upset. So yeah, no, that's it's a great insight.
what amazed me real quick is,
Yeah,
and I've said this for years, the tough industries like the elevator contractors do more on safety and prevention than your mom and pop carpenter or
sure,
your mom and pop electrician. No offense to those guys, but everybody will write them forever. You got 100 insurance companies want to write them. To me, if I'm an insurance company, just like the one that we got that's writing these now, I want to be the industry that pays the most attention and puts the time and the money involved to help prevent as many losses as they can because they know they appreciate it. They appreciate their program. They know that they can't afford those 15 to 25% rate increases.
sure,
So to me, and there's been some players that got in this market, they got some claims, they got scared and they bolted.
sure,
I would be, if I was an insurance company, I'd want the tougher risk because you're going to have the better safety programs. You're going to have the better hands-on, and they'll listen to you and do what you need to do. Versus, ABC contractor that goes out and shops every year and they move for $500.
yeah, yeah.
So,
Yeah, I mean, kind of what I'm hearing you say is that if you're an insurance provider, it's not a get rich quick industry. You really need to move in and be part of it and get to know it and spend your time, and yes, you can serve this niche and it'll work great for you, but don't expect to just come in and ride it and not pay attention to what you're doing.
oh, absolutely, you're exactly right. So, yes.
Yeah, very cool, very cool. So as we wrap up, I just got one more question for you, and that is, if I were a contractor, looking to learn more about your program, or maybe I'm considering, starting a new company, where would I start?
Just give me a call. It'll be my cell phone, so you can call me day or night, and I'll walk you through the whole process. And most of my customers that I didn't know were really personal friends now. I
Cool.
really get heavily involved in my customers. But I can get you going from A to Z. Or if you're an existing elevator contractor and you're seeing those rate increases like I talked about, give us a call. We're saving people six figures on a lot of these, sometimes seven figures. We're very creative. The program works. We have plenty of references to give you. The one thing I know about the elevator contractors, they all know each other, which is awesome.
Sure.
So, I'd be glad to let you call any of my clients and ask them anything you want. But we'd love to talk to any and every one of them because this program works. It gives you great coverage, great pricing, and it allows you to expand your business because if your insurance is going down, then you got more money to do other things, buy autos, buy more equipment,
Sure.
whatever you need to grow your business. So
Sure.
we're here for you.
Yeah, it sounds like it can do it without, take away a lot of that worry. Do I have the right insurance? Are these, are there exclusions I don't know about? I mean, uh, any of that's taken away sounds like a win for everybody. So, Alan, thank you for being on with me today. I appreciate it very much.
Hey, thanks for the opportunity because it's a great industry. I love the elevator industry, and I hope to talk to many more that are having these pains in the insurance industry. I'm kind of like your doctor. Let me handle your insurance, and you do what's great. That's do maintenance and new elevators and mods and the whole work. So, but we're here for you. We hope that we love to talk to you and work with you. So, thanks
Awesome.
for the opportunity, Matt. We really appreciate it. You're doing a great job in the industry. We need more people like you. So, thanks, Matt.
Thank you. Appreciate it, Alan. Thanks again for listening to Elevator Tools and Tech from the Elevator Careers Podcast. Please remember to check out Insuramax to learn more about the benefits you can receive from their elevator insurance solutions. You can find them online at insuramax.com or give Alan Jones a call at 502-648-7496. Until next time, stay safe.